Okay, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It's December 29th, 2022. Just a couple more days left. Couple more days, I promise. We'll talk about the markets a little bit. We, I guess, got somewhat of a rally. I don't know if I would call it like a big Santa Claus rally. I mean, if this is the Santa Claus rally so far, I don't know. We'll just have to see how this plays out. I did identify a falling wedge on the NASDAQ. I mean, you can see this on the NASDAQ futures. You can probably see it on the QQQ as well. It looks like a falling wedge, and it looks like we kind of broke out of it today. Again, with the technical analysis, you never know when these things are going to fail, if they're ever going to hold up. But I mentioned this earlier today on my Instagram before the market had even opened. And I was expecting maybe a break of yesterday's closing price, but I think we actually broke yesterday's closing high. Same thing with the S&P 500 futures. So markets, broadly up on the day. Not that it really matters. I mean, I think long term, we all know where this is going, probably into 2023, especially if the Fed doesn't reverse course, which I don't think they will. I think if they don't raise, they're at least going to keep these rates elevated for quite some time. But, a lot of people speculate that we could go past I think it's 5.25% is the terminal rate that they're estimating, whatever that means. They could go a lot higher than that, maybe another 75 basis points and maybe to 6%. You got to think, too, there's other nations that have much higher interest rates. So even at 4.25% or 4.50, wherever we are at now, 4.5. This is not a high interest rate environment. These interest rates are still extremely low, but the market's reacting to them pretty aggressively to the downside because of the years and years and years of expansive monetary policy. We all know that. What I want to cover in this video is, as far as the macroeconomics are concerned, the potentiality for a Petro Yuan or some sort of commodity-backed currency to rival the dollar. I was watching a really interesting stream. Well, I was actually listening to it when I was at the gym today. Had to go to the good old Planet Fitness because the main gym down the street was closed. So I'm glad I never canceled that membership. I go every once in a while. It's like, I don't know, maybe $100 a year or something. It's good to have for emergencies. You want to have kind of like you want to be diversified in stocks. You want to be diversified in your banking. You also want to be diversified when it comes to your gym memberships. And I don't sign up for like a lot of crazy subscription and everything. So I'm pretty on top of what I'm paying for. Actually, I've got not a story, but at the end of the broadcast, I'll talk about the Rocket Money app. I just keep seeing these ads for Rocket Money, and just too stupid. I'll get into that later. I do want to talk about also, in regards to China, the situation with, China easing the lockdowns, and they've really flipped the script on the narrative here when it comes to China and COVID and lockdowns and international travel. Completely just flipped the script. I'll explain why, but the narrative just a week ago, maybe even like 3 or 4 days ago, is the exact opposite now of what the Western media outlets are trying to portray now. So we'll get into all of that. Markets, up across the board. We had the jobless claims come out, which matched the forecast. This probably had something to do with some of the more positive sentiment in the markets today, because it says, like right here on Trading Economics, the number of Americans filing new claims for unemployment benefits rose by 9K to 225, which was in line with market expectations of 225. Continuing jobless claims increased to 170. What is this? No, I guess that's over 1 million. That's almost 2 million in the week ending of December 17th. So the highest level since February, suggesting it's been more difficult for the unemployed to find new jobs. This is kind of in line with supposedly what the Fed wants to see. And so, I guess the market is kind of drunk on any little bit of news that might indicate that the Fed will not continue to hike interest rates, that they may even pivot. But again, you got to go back to like some of the housing data, the very sticky inflation in the housing market with these, the housing prices actually surging with the last number that we got. Yes, the overall home sales are falling. And yes, maybe the housing market is collapsing, at least by volume. But as far as these prices go, the wealthy in the United States, if they have the means to pick the exact house in the exact neighborhood that they want to live in, they're going to pay for it. They'll pay the highest price there is. And so, this kind of indicates that the Fed has a lot more work to do, that the inflation is super sticky. I think it's possible we'll see inflation get worse. They want us to believe that it's peaking or that the interest rate hikes are going to do something to stop the inflation. But, going back to Greenspan, this guy, the Fed chair before Bernanke, so this was like before 2008 even, he admitted that they really have no idea what they're doing. They have no idea what they're talking about. It's all just econo babble. That's essentially what Greenspan has said on public record. It might have been an interview for 60 Minutes or something, but what do they really know? They're kind of just experimenting. And even Jerome Powell has said in recent months that inflation is it's a curiosity. They're still studying it. They don't really know how it works. So, I think it's possible we'll see inflation surge into 2023. A lot of people don't want to believe that. And I'm not saying it's going to happen, but it's definitely not outside the realm of possibility as far as I'm concerned. All right. Then there's the whole, we'll get to the COVID stuff in a little bit, but I want to talk about, we had the recent news when it comes to oil about Russia, Putin, basically in February, he wants to stop selling oil to countries that have put that $60 cap on the oil prices coming from Russia. The commodities constraint, the energy constraint is going to get serious, especially for European countries. They had a good steady supply of natural gas and oil, and yes, they are still buying natural gas and oil from Russia, despite supposedly we're at war with Russia. They're still buying this oil, but obviously the geopolitical issues are causing European countries to be much more insecure when it comes to sourcing their energy. Will they be able to survive this winter? Probably. What about the next winter? What about the winter after that? How long is this quagmire in Ukraine going to go on for? But that's the recent news from Putin is that starting February 1st, he's going to stop crude oil and oil products for 5 months to any nation that adheres to the cap. And they've made these kind of threats before, like cutting off 100% of the energy supply to Europe, and none of that ever actually materialized. And Europe is Russia's biggest customer when it comes to selling their oil. There was a quote here, if I can find it, from let me see if I can find this. Yeah, from Bob McNally of the Energy Group, or the Rapidin Energy Group. He told CNBC that the EU's embargo on Russian seaborne oil, the oil price cap, and Russia's export ban would be the most significant factors impacting supply next year, and presented a completely new scenario for Europe, and for Europe to be able to heat their homes. You have other people earlier in this CNBC article basically saying that this wasn't going to have any effect. Sophie Lund Yates says it just adds fuel to the anxieties around supply, but things should be all right. There was a couple of other quotes where they were, Dan Yergin, vice president of the S&P Global, says that despite skepticism on whether the program would work, leaders had found a way to keep oil flowing into the market while reducing Russia's oil revenue. But again, I'll go back to what Bob McNally of Rapidin Energy Group said, that this creates, if Russia actually goes through with this creates a completely new scenario for Europe and for the rest of the world. And because of the war, too, it's not just energy, it's also food. Zelensky has said that protecting Ukraine is essential to global food security, and maybe he's right. I'm not going to deny that Ukraine doesn't supply lots of grains to the rest of the world, especially to Europe. They are the breadbasket of Europe. But again, it just seems like, Russia sent, first they were saying 100 missiles. Now it's like 60 missiles. Maybe tomorrow it'll be 66 missiles Russia fired into Ukraine. Apparently a bunch of them were shot down. But what I don't understand is all these missiles going into Kiev, going deep into the heart of Ukraine. How every time this happens, like 3 people die, 2 people die. Like, I don't know. To me, if there's all these missiles being sent into Ukraine by Russia, it seems that there should be more deaths. Not that anybody wants that, but that seems kind of light. 100 missiles get fired into Ukraine and only 3 Ukrainians died? I don't know. Are they actually striking these missiles down? Is this whole thing just kind of some sort of ball game, right? Maybe to enrich the weapons manufacturers. I can't quite figure it out, but something really doesn't make sense here. We had Zelensky come over here, like a week before Christmas, begging for another $50 billion while in his green camo tracksuit, or his camo green tracksuit, I should say. I don't like war. I don't support war. I don't think any of my viewers support war. I really hope they find a solution to this immediately, because, whether Zelensky has to surrender to maybe terms that are not exactly favorable to the Ukraine, but are more favorable to both the West and Russia, whatever they got to do, I hope they're able to do it, because in my personal opinion, I think Zelensky and, the Ukrainian government is not only dragging Ukraine down with them, but dragging the entire world, into this mess. We keep seeing in the media, like even in this CNBC article about Putin wanting to stop selling oil to these countries that are price capping their oil. They keep using the term the unprovoked attack on Russia, and they believe that if they just keep printing this, the unprovoked attack by Russia on Ukraine, they just believe if they keep repeating that line that people are just going to believe it. I see through all the propaganda, and I see through all the false narratives, almost all of them. So when I read this stuff, I just can't help but shake my head and wonder, who the hell believes these people? But that being said, the dollar, oil, commodities, they're all being weaponized, and the rest of the world is waking up to this. The rest of the world sees that, Russia's potentially not the only target of a weaponized dollar. When they can just freeze assets and freeze dollar reserves, other countries are looking at this and trying to come up with ideas to sort of de-dollarize. And you see this in the news every single day. It's not really talked about on mainstream television, but if you look up, Petro Yuan, or you look up BRICS nations updates on Google, just, Google this stuff every day. There's something coming out every single day. There's other countries now that want to join the BRICS nations, because the BRICS nation stands for Brazil, Russia, India, China, and Saudi Arabia, right? Those are the 5 main BRICS nations. And so I was watching this video today by a YouTuber named Maneco 64. It's actually a live stream where he's interviewing Andy Schechtman, president of Miles Franklin. But the title of the video is "The Dawn of the Petro Yuan Will Mean Years of Inflation for the West." So just imagine, guys, because I've talked about this too recently, how Saudi Arabia and China met to try to negotiate some sort of transaction for oil in yuan. It has not yet been done yet, but Russia has been selling China oil for yuan. If other countries start following suit, just imagine a situation where the yuan is now backed by oil and is a rival to the petrodollar. Right, so you would have a petro yuan and a petrodollar, and then imagine, go even further to imagine that some of these other countries within the BRICS alliances. You're talking about like 80+% of the population here, the global population, potentially de-dollarizing in the next 5-10 years, maybe sooner than that. Maybe it doesn't happen. Maybe we go to war over this and we make everybody, submit to the dollar for the next 50 years, 100 years, whatever. But it's an interesting idea to think about. So just imagine a scenario where the dollar has a legitimate rival, and I'm not saying the yuan is a legitimate rival, but other countries might believe so. And then imagine if these other countries start backing their own currencies with their local commodities that they're exporting. You could see how this could get very serious for our way of life here, not only in the United States, but throughout the West. And I think that one of the things that this guy in the Maneco 64, and I'll leave the link for the stream so you guys can watch it. It's about an hour long, 45 minutes long. Again, I was listening to it at the gym. It's a very easy listen. You can listen to it while you're jogging or whatever, or listen to it on the way to work. I think it is an interesting rabbit hole to go down, and maybe something to prepare for, whether you're going to stack metals or think about other ways that you can maybe reduce your risk to the dollar, especially like as a trader. I'm always just trying to collect as many dollars as I possibly can because, I'm not trying to carry overnight risk, and I'm not really worried about long-term investing right now. I don't want all my wealth sitting in something that could potentially face a legitimate rival that would then, collapse our entire monetary system. But one of the things that was said in this Maneco 64 podcast is that all this stuff that the Fed is talking about, it's basically a complete sideshow. And I think a lot of us feel this way. The Fed ghouls come out and contradict. You got like Jim Bullard contradicting things that Jerome Powell says at the FOMC meetings, and they talk about, how they don't really understand inflation. Then they talk about, they need to get the inflation down, but then they can't have wages go up, so they got to get our wages down too. I mean, it's absolutely incredible. The double speak, and then there's the 2% average versus the reality, which or the 2% inflation target, which in actuality it's a 2% average over time, and they changed this a little while ago. It does seem like a complete sideshow, but it does affect the markets. The stock markets react to it. We're living in this, era now where, good news makes the markets go down. Bad news makes the markets go up. Any little hint, any little indication that maybe the Fed won't raise rates, or, maybe there's a 5% chance the Fed's going to reverse course, makes the markets rally 2%. It's a freak show. It's a complete sideshow. And, we have to wonder, do these people really know what they're doing? Are they as incompetent as the government is? That's a very real question. But yeah, if you just look into this, BRICS nations and the road to the de-dollarization when it comes to Saudi Arabia, and China and Russia, if China as well, investing all of this money into Africa's economy and infrastructure, also South America too. China is going to be receiving royalties for years to come from all these investments they're making in, essentially what is the third world here. And the West isn't taking advantage, because it's considered racist, right, for the West to go into Africa and, build up the infrastructure. That's racist. But, China to do it, well, they're going to fill that void from the post-colonialists, I guess you'd call it, that have moved out of these countries and kind of abandoned them. China's moving in. So they're going to have a lot of global influence. But, maybe China completely collapses under its own weight. That's happened several times throughout history as well. I don't want to fearmonger here, but we have to look forward, right? The markets are looking forward. We need to look even further than the markets, right? And try to determine what is possible. What do you want to increase exposure to? What do you want to reduce exposure to? Again, with China, they completely flipped the script when it comes to the lockdowns, right? The mainstream media was really putting a lot, and the Western governments putting lots of pressure on China to stop the lockdowns, to let their people out of the apartment buildings, to, open their economies back up. This was the narrative for like the last month, how bad China was, how evil they are because they're cracking down on anti-lockdown protests. Meanwhile, now we find out, just days before Christmas, that like half of the country has COVID. So, and now, right, instead of being optimistic about China reopening, now it's all pessimism, right? China's going to spread COVID. We're going to have worldwide lockdowns again and worldwide restrictions. And now these Chinese travelers, a bunch of them showed up in Milan, Italy, like 50% of them on 2 different flights, 50% of 2 different flights were infected with COVID. And you have Italy, they are going to screen their Chinese visitors. France is not going to screen their Chinese visitors because Macron thinks it's racist to do so. So none of these European nations, there's no like cohesive strategy to fight potentially another huge outbreak of COVID coming again from China. Even the United States, even Biden is going to screen passengers from China. They have to have a negative COVID test to get into the country. I just don't understand. How stupid do they think we are? First they say that the lockdowns are too extreme, that the Chinese don't deserve this, that they need to let their people go, they need to open up their economy. And now the Western media is saying the exact opposite, how much danger we're all in, how big of a threat it is that China's reopened. And now we find out, well, maybe there was a reason for the lockdowns. Something like 1 billion people, maybe 700 million people have COVID right now in China. That's like twice the size of the United States. It's just a dangerous game they're playing here. We know how badly the media and the governments fumbled the last global, surge with the first phase of the pandemic. Are they going for phase 2 now? It wouldn't surprise me. It really wouldn't surprise me. But I hope, the people in China do get well. The West wants to blame it on the fact that their Pfizer vaccines are not in China. But everybody that I know got either Pfizer vaccines or some sort of vaccine. Every single one of them has gotten COVID multiple times. I'm the only motherfucker in my family that's gotten COVID once. And all natural immunity here, right? All natural immunity, despite all the pressure, all the threats, all the totalitarian, government threats of surveillance and everything that we were under. I'm still all natural, baby, all natural immunity over here. So, why is it that they're pushing for the Pfizer vaccine in China? I'm not even convinced it works very well over here in the West, and that's just, it's a little bit of anecdotal experience here, but I kid you not, my entire family has all gotten COVID vaccines, and all of them have gotten COVID not once, not twice. Some of them have gotten COVID 3 freaking times. You really can't make it up. You just can't make it up. But, the West wants to blame China's outbreak on the fact that the Pfizer vaccine isn't in China. They claim that Chinese vaccine technology is inferior, which that could be a little politically incorrect. I heard somebody say that on CNN today. I was like, ooh, China's technology inferior? CNN's getting a little racy there, right? No pun intended. Actually, pun intended. So what's going to happen here, right? Are we looking forward to a whole nother way, new strains of COVID? That's another thing now. Is this just mainstream media fear propaganda, deep state fear propaganda? Let's hope so. The markets, I guess, weren't too concerned with it today because they were just all hyped up on the initial jobless claims matching the forecasts. You also had the commodity prices coming down a little bit. Crude oil's back at 78. Brent's at 83. Gold is at 18.14, silver under $24, right under $24. Just kind of chop it around, I think, with the commodities. And there was supposed to be this huge surge in, commodity prices because the demand now in China is, because if they're going to reopen, there's going to be a lot of demand there. But you just have so much. You have these threats from Putin now, cutting off oil. We'll have to see how the rest of the winter goes, when it comes to what kind of pressure is going to be put on oil and natural gas. But yeah, every day is a complete fuck fest, a complete shit show. and they switch the narratives like overnight. It's like one day they're rallying, the rallying cry is China needs to reopen. China, it would be good for the global economy. And then the very next day, oh, China's reopening. It's a threat to the entire globe. So I don't know where they stand with it. It's hard to figure all this out. But you guys let me know what you think in the comment section down below. So real quick before I end this video, because we are getting a little lengthy here, 25 minutes already. Doesn't feel like I've been talking for 25 minutes. I hope this stream has been interesting, but I do want to end on a little note about my trading. I did get back today to doing what I do best, which is scalping. I scalped nearly $600 out of the market. I was in the trade for not even a half an hour. The options contracts, at least the ones from a couple weeks out, were moving pretty slowly. It was kind of frustrating to watch. They were literally moving like $1 at a time. And it was because there wasn't really a huge explosive move. Like we had a 2% gain, but it took like all day to get there. I think PayPal as well. We're talking about a couple of dollars on all these stocks that I'm trading. In my opinion, I mean, the wedge, the descending wedge on the NASDAQ, it looks pretty good, but I always tell you guys this, the technicals, they fail all the time. I even think they have ways of manipulating it to make it look like these patterns are going to work out, and then bam, they just make them go the exact opposite direction. So be very, very careful. Be very, very careful in the crypto markets. I know I called the Solana investors clowns yesterday, but I'm just having a little go at you guys. If you are going to invest in crypto, be extremely careful. Bitcoin was down like maybe $100 or something today, but maybe that was yesterday. Right around $16,000. I think Bitcoin has a long ways to fall. We are in the crypto winter. We're in the stock market winter, and we could be in the winter of some sort of like a dollar winter. The dollar contracted a lot the past couple of months. Will the dollar break out of this kind of holding pattern it's in right now and surge higher? I certainly hope so. I would like it if my dollar was worth more going into 2023, but there's no way to predict these things. But yeah, I did get back to scalping today, and that's what I'm going to focus on. Like I said, I'll do a video about my goals, my trading goals and my financial goals going into 2023. But scalping is just what I do best. I have no stress right now because I'm in all cash. Well, maybe I should be a little stressed out that I'm all in cash right now, considering everything we talked about in this video. But I've got no overnight exposure, no overnight risk. I did not trade contracts that expire tomorrow because I just couldn't take the chance that it wouldn't, because if it doesn't work out, it will go horribly. When I'm trading these option contracts, I'm always trading at least a week ahead, sometimes 2 or 3 weeks ahead. Even though I'm scalping, I'm trading the contracts that are 2 or 3 weeks out. They don't move quite as fast. If I had bought the contracts, because I think I had the $85 calls for the 16th of January, I think is what it was. If I had bought the $85 calls that expire tomorrow, they would have moved a lot more. But we didn't actually ever reach $85. And if we don't reach it by tomorrow, those contracts are all going to be worthless. And one more note. The position that I sold yesterday for a pretty big loss, like $3,500, like it sucked. It made me sore. It hurt a little bit. But when I woke up this morning, I was thanking God for helping me through that decision, because if I hadn't have sold those PayPal puts, my account would have been devastated. PayPal today, I mean, just by pre-market, by the opening, I would have been maybe 3 times. I would have been down 3 times as much as I was down yesterday, right? Like 3 times more. Like if I lost $3,500, I would have been down like $7,000, $8,000. I don't even want to think about it. So that was the right decision to not hold these contracts. But again, I'm going to go back to this. Scalping is what I do best. I like just the risk-free feeling, the no overnight exposure, and just the quick in and out trades. And that's what I'm going to focus on. And I'm going to talk more about that as well. We are going to get more into charts and stuff like that. I need to get more RAM. And I just found out on this MacBook Pro, which is from 2015, the 8 gigs of RAM is actually soldered into like the main board. So you can't actually replace the RAM unless you know how to solder. So I'm just going to get like a Lenovo or something. I bought my dad a Lenovo like, I don't know, maybe 10 years ago. and he's still using it. It's a fantastic computer. So I think I'm going to get a Lenovo with maybe 16 gigs of RAM, maybe 32. 32 seems a little excessive. If you guys know anything about RAM and how much RAM would be appropriate to run like Thinkorswim software, streaming software and internet, let me know. But I think 16 gigs of RAM sounds about right. So that's going to be another goal going into January here. All right, so with that, I will leave it there. Let me know what you guys think in the comment section down below. Follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.